What's up everyone, welcome back to the Idiot Investor Guide with your host Guy Davidson. Today we're going to be going through video number 2 of my hatch portfolio, and I'll be taking you through lessons I've learned, what investment I've been doing, how it's performing, and also I want to talk about the concept of catching a falling knife when it comes to investing, because I'm sort of making the mistake of that already and you shouldn't, so learn from my mistakes. State of this thing, I'm going for that Investing with Tom chic. If you haven't seen Investing with Tom videos, I'll put a link below or the end of the video or something. You should check him out. Not only does he have a very impressive beard, he actually knows what he's talking about, unlike me. I'm still an absolute idiot when it comes to investing. Which reminds me, don't take any of this as financial advice. Please don't. If you do, you're more of an idiot than me. It's just for entertaining. Enough about me, more about the shares. Let's get into it. So you can see, again, I am up and doing pretty well, actually better in Hatch than I am in Sharesies. If you haven't seen my Sharesies portfolio journey, go to my channel and you'll be able to see there's a playlist for that as well. I'm going through both platforms so you can get a taste of what they both feel like. I'm up 16% at the moment. Tesla, Elon Musk kicking it out of the park, even with his tweet recently. So this is post his tweet to say Tesla shares are overinflated, and everyone was like, oh my god, they went down like 10%, whatever it was. Well, they've gone up more than that now, 66.5% on what my investment was. So that's the most actually gain that I've had in Tesla since I've been invested. They sort of went up and back down again, and this is the falling knife concept. We'll talk about that in a second. But you can see really strong performance so far for my investing in Hatch. Again, I'm still balanced 50-50 in ETFs and companies. That's just actually because I haven't invested any more of my wallet into ETFs or into stocks yet since the last video. And that's this whole falling knife concept. The concept of catching a falling knife comes from chefing and the deepdish.org, which I'll put a link to, has a good write-up about it, how he lost 10 grand trying to catch a falling knife. But essentially he says any good chef with 10 fingers knows not to catch a falling knife. And in the investment world, it's like you're trying to catch it just before it hits the ground. So you're watching shares drop or stocks drop, the value of them, and you're trying to guess when the lowest price is going to be so that you catch it right at the bottom and get the most gains as it comes back up. Looking at everything going on in the US, and not that I followed it that closely, I'm just a huge speculator when it comes to Trump and his great leadership.
Clarify your comments about injections of disinfectant. They're quite provocative.
No, I was asking a question sarcastically to reporters like you, just to see what would happen.
What I'm actually looking at was, I thought that there would be a much bigger crash again in the US, and so I thought I'll hold on to my money in my wallet and invest it when that big crash happens again. It did a little bit, went down a bit. My Tesla gains went down to about 30%. The rest of them were down to, below 10, even down to like 4. It was actually at the point where Apple and Alphabet had their quarterly earnings announcements. I speculated that they would have dropped significantly more than what they expected, and so I thought that would be the perfect time to reinvest. They will crash down and I'll be able to put some money in. The opposite actually happened. They seem to not be as bad as what people were thinking, and the stocks actually started to go up after those announcements. So that's what I mean by catching a falling knife. I should have just invested, because it still would have been a bargain to buy them at that price. Still is a bargain to buy them now, so I should be investing now. But now you get into that whole area of shit, I should have done it when they were that low. Now they've gone up. If I do it now and they go back down, then I'm gonna lose out on gains. I'll actually not make gains. So I should wait just in case it does crash again. But what if it doesn't? It might not crash again, and so then I'm going to be sitting here in a month's time talking to you guys again, going, yeah, Tesla's up 100%, Apple's up 50%, and I still haven't invested anything more. So that's why don't invest like me. I'm an idiot. Just keep chipping away, keep investing in, because even if I invest now and it crashes, in 10 years' time it'll be well up from where it is now. So it doesn't matter when I start investing, I'll make a gain. So don't try and catch that falling knife. Keep all 10 fingers. Your fingers are important. So it'll be interesting just to look a little bit into the Tesla stock. So it's been a journey. It's been a wild ride already. I've been looking at a few videos actually online as well of people making ridiculous amounts of money off Tesla because it's so volatile. But volatile means it's, you know, up and down like a bloody roller coaster. So you can see when I first put the my investment in, it was sort of instantly jumped up anyway, but then it's really had a bit of a wild ride, got up to 50%, back down to sort of 30, 40, up to 60, and back down to 40. Yeah, I kind of wish I'd invested back in sort of around one of these points. Hindsight's 2020, basically. So that's why I'm saying don't try and guess when the market's going to go up and down. Just keep chipping away. If I keep chipping away, my dollar cost average, so like the average level that I invested in, the average price I invested in, would be slightly higher than what I am at now, but I'd have more money invested, so I'd be making more gains. So don't try and focus on having like the lowest price where you keep investing in, because the more that you invest in, the more money you have in. So, you know, 13% of $500 is more than 13% of $200.
2 + 2 is 4, -1, that's 3, quick maths.
So you can see, talking about average cost price, my average cost price is just under $500, currently sitting at around $800. I think before COVID it was around, we've got a market info, I think before COVID it was around $1,000 was what Tesla shares were at. So that's what I'm hoping it'll go there and beyond. We look at the last year, yeah, $900. So it's actually Tesla, you dog. It's basically back up to where it was pre-COVID. So yeah, I mean, Elon thinks that that's stupid. I guess the rest of the world is assuming that it's going to be a great success, which I am too. Like that's why I'm invested. I think it will continue to have high growth. I mean, look at that take off. I think it'll keep to do that.
What'd you say?
Yeah, whatever. What I've found really interesting actually is that my ETFs aren't doing as well as my individual picks. Guess I'm just really good at this investment thing. But I think what I was going for was high growth stocks. So Tesla for sure, Alphabet I see will continue to grow. Apple, I think they'll keep coming out with new innovative things, and they've got such a cult following now. I think it will keep growing, maybe not as fast as it used to, but it's actually jumped back up quite significantly over the past week or two. It's done really well, because Alphabet and Apple were both sort of sitting, you know, around 10% for a while, and then yeah, it's really just shot back up. This is why, ladies and gentlemen, I should have invested more again earlier, because I could have been making like an extra 10-15% on top of whatever else I invested in. So don't catch that falling knife. Don't be an idiot like me. This is all in US dollars as well, by the way. I think most of you would know that, but it's kind of nice to look at it in US dollars, because you're like, yeah, that's okay, but you know, $300 return is actually almost $500, so that's nice. So it'll be a nice bonus when you exchange it back. If you do bring it out and exchange it back, it'll be a nice tidy bonus. It'll be interesting to see what shares he comes out with in terms of US investment. They're planning to have US stocks in the next couple of months. I'm going to do a video on Sharesies versus Hatch, which you'll be able to see very shortly. That will likely have a follow-up installment in a couple of months' time when Sharesies does actually come out with US stocks to do a reanalysis of which I think is the better investment platform for various reasons. The S&P 500 also, for those of you that don't know, is an index fund, and index is just like a list of companies, and so it's tracking the top 500 companies on the US stock exchange, specifically the S&P. So basically what this is doing is saying, all right, I'm going to take whatever money you give me and I'm going to invest it into 500 different companies at certain percentages. So it's like you're invested in 500 companies by just investing in one. So that's why they're seen as relatively safer investments, or less volatile, less up and down, because you are invested not only in a couple of the top ones, you're invested in 500 different companies. So you imagine if one company is doing poorly, another one might be doing well, and vice versa. And so over all of those 500 companies, it would balance out a lot more. So you basically get the average growth of those 500 companies rather than just 1, 2, or 3 of those companies. So Tesla, Apple, and Alphabet might be doing better for me at the moment, but if they all of a sudden crashed, there might be some big scandal, or there might be something go wrong, or Tesla's up and down all the time anyway when they broke the window on their new truck, or Elon Musk tweeted. So if any of that stuff happens, there'll be much less impact on a portfolio of 500 shares or a fund of 500 different companies. So that's why it's less volatile. You might see less growth, but you'll see more consistent, steady growth. I think it's about enough from me for now. If you want to follow my hatch journey, subscribe, leave the comments. I'm loving the comments. So yeah, continue that conversation. I'm enjoying trying to impart what little knowledge I do have, and also just get some ideas off you guys as to what you're doing. Loving to watch some of your videos as well that you've been commenting down below. So leave that comment. If you want to watch my Sharesies portfolio journey, check out my channel. There's a whole playlist on that, and I'll be doing some reviews on Hatch versus Sharesies very shortly, so watch out for those. Until next time, friends, we'll catch you on this channel. Have a good one.